Hey cycle nerds, a very warm welcome to another episode of Cycles TV. Today I will have a look at the US stock markets to see what the cycles tell us in this early phase of 2026. On the US stock markets, we will have a look at the S&P 500, the S&P 500 equal weight, the Russell 2000. So we will have a broader look at the US stock market indices for today on a daily basis. So stay tuned.
From the mind of Lars von Tienen, the most advanced cycle analysis, hot off the press.
Yeah, before jumping on the US markets, let's make some noise to meet the cycles crowd in New York, May 2026. You might have heard already. So we have cycles in the city this year in New York again, as we had last year. So if you really want to meet us on site in New York for 3 days, that's the place to be. Book your date now, save the date, May 28th to 30th. This is where we are in New York. We will host the same conference as we did last year. You can have a quick preview on the link below if you want to have some experience as we had last year. So this is a wonderful place to be, 2026. It will be crowded by cycle-minded guys, and it's a fantastic event just to discuss all things around cycles this year in person in New York. Fascinating lineup, so that's the place to be. Said that, now let's look at the US stock markets. To start, we always need to set the broader context, so I will look at the longer time perspective using the value line index, which gives us a broader a measure of almost all stocks which are listed at the US-based stock markets from different places in the US. So, and let's now bring this onto our screen. So this is the geometric value line index on a weekly scale. So we start with a weekly scale. We can also zoom in. You can see just from the long-term perspective, it's quite interesting that the major top in 2021, looking at that broader market, has not been extended. But that's not what we're looking at today. So looking a closer look here. So we are now currently at the levels which we have seen at the end of 2024. So that's where we are today. And if we now have a look at the long-term cycles, which is quite obvious that we have a long-term cycle with those 190 weeks, which is currently active on those markets. And I mean, it's a clean signal here to the left. There is really no other cycle which comes into consideration. And also looking to the right, there's almost no other cycle. And just have a look at this beautiful right shoulder in the spectrum. I mean, you don't see it that often. And maybe it's just for the nerds of cycle analysis, but this is quite telling us something. There is no longer cycle than that, and even the shorter ones are not that prominent as this one here. So it's a quite interesting spectrum anyhow. And said that, you might be familiar with the 190-week cycle, which is approximately the 41-month cycle, which Dewey talked about, and that cycle is visible since the 1930s in the US stock markets and has a very, very fascinating correlation with the price oscillating for the past 100 years. But I will not go into that history of that cycle. Let's just have a look at where we are in that cycle now. I mean, the statistics tell us it's the most stable cycle. It has the ranking score of 1 from the prominence in the spectrum, and it has the highest strength. So all our criteria are fulfilled to use that cycle. And you can see also down below, I mean, from stability, there's quite an offset to the next ones. And also from the ranking, there's nothing in the ranking. Okay, so now let's overlay that cycle. And I mean, that story, we are talking here very often from the long-term perspective. So that long-term cycle was due or is due to peak mid-2025, which we have passed already. And we are now at the third important instance of that cycle. And that's the reason I want to highlight that situation today. So first, I have expected that cycle also to have an impact on the major stock markets already summer 2025. And even the most earliest point in time could have been here end of 2024, where we approached the first topping phase of that cycle here. So that could have been a very early point for the arrival of the topping window here. Then the next point in time was here mid-2025, which, I mean, we know from the indices did not work out, and we had all the AI hype going on with liquidity in the markets. And now we are arriving at a third interesting point in time, and which is now here, because I think this is the possible window of time or window of opportunity when we should expect the real cycle top showing in the raw data. So, I mean, we have passed the first point here. We have now passed the theoretical peak, and we are now more or less at the end of the normal deviation of such top rushing in. So that's just, so from a long-term perspective, that cycle is still valid to have a close eye on that cycle. And by the way, if you're familiar with cycle analysis, it's often common that we see not the classical theoretical single shape, so that you have a first top indicating here before that and a secondary top just afterwards. So this is a common pattern in cycle analysis, that you see one top more early than the theoretical one and another one more late. And you see they are quite on the same level here, talking about the broader market or the whole US market here. So this possible top of that cycle is not off the table. I mean, we are all aware that the second half of 2025 did not work in favor of that cycle and even the shorter term cycles. But now we need to go even a time frame closer into the markets and see what the daily cycles, how they fit into that long-term perspective. So let's see this as the broader context of the financial markets, which are still in a long-term topping condition based on that long-term cycle, which is valid for 100 years almost now. So moving to the daily time frame, and let's stay on the geometric value line index for a moment first, as I want to analyze the most broader market perspective as we have. So, and that's it. So just the daily perspective here, zooming in. And if we have a close look into the spectrum, there's clearly one daily cycle which pops into the view of our cycle analysis perspective. And you see it quite here. I mean, it's peaking on the spectrum, right? So it is the 130 days trading day cycle, which is standing out. You see the shape in the spectrum. These are our criteria. So this shape is quite nice. The left and right shoulder are separated, and we have a sharp peak. And the amplitude is even higher than those other two cycles, which could potentially come into play. So the 130-day cycle is listed here, not on the top. So from the stability score, it's not the most stable cycle, but you see from the ranking, so the prominence of that peak in the spectrum, in combination with the stability still about the threshold of 0.5. So it is okay. And as we know that we have a kind of skewed second half of 2025, that's the first cycle to consider in any daily forecast we are dealing with. So let's have a look at that cycle first. Let's move to the left part here and let's see that cycle in action. So just zooming in a little bit, I like to get a visual perspective of that cycle related to the raw changes in trend. That's always a visual inspection. So we are talking about time-based cycles. So we are not looking at the amplitude. We do not look for price targets. So just the timing window here, which comes into play with this top, and the possible bottoming window here, which comes into play here. So the timing of that cycle, and that's just what I want to verify here in that regard, seems to be okay, sideways seems to be, 90% spot on if we go back 1, 2, 3, 4, 5, 6, even 6.5, 6 to 7 iterations of that cycle. And the change in trend correlation time-wise is what we would like to show up. So that's the purpose why we're here, and that's why we see that cycle currently active. So now what makes this cycle interesting in addition? And that's now the part of the story, setting that daily cycle into context of the longer term cycle just in a moment. But hold your thought for a moment. Stay with me to give you the reasoning. So here we are. First, that cycle previously peaked here at that point in time. Yeah, so call it end of 2024, early 2025. Yeah, so that's the I call it number 1 here. It's not really important which numbering here. So then we had the second peak of that cycle in summer 2025. From here we stopped the uptrend here, so that upswing cycle. So then we moved more or less sideways. Yeah, so the downward phase of that cycle more or less led to a sideways consolidation during that phase in the value line index, and then the final upswing here in alignment with this cycle upswing here. So now we are at count number 3, so another possible top of that cycle. And keep those 1, 2, 3 in your mind for now, and the timing of those points here. End of 2024, beginning 2025, mid 2025, and now early 2026. Let's now move back to the weekly chart we just looked on, and let's now bring in the dates we just discussed for the shorter term cycles. So the number 1 count was here for the first top, end 2025, beginning 2020, end 2024, begin 2025. Here we had the second top of the short-term cycle, which exactly was in alignment with the top of the longer-term cycle, yeah, which was in summer here. We remember that, which just led to the sideways movement. And now we are on the third point of that short-term cycle top, yeah, which might not be as beautiful, but hopefully you got it. So, and that's exactly the same window of opportunity I explained to you at the beginning of this session. So the earliest point in time, we could have seen that long-term cycle to peak if we have a left translation of that cycle here at that point in time. So then it comes to the midpoint of that cycle, which was also the second top of the 130-day cycle here, which resulted more or less in a sideways consolidation phase. And now we are at the end of that window, let's call it that way, for the normal deviation. So this would then show up as a right translation, which is quite useful for financial cycles, by the way, which should come in now at that point in time. And going back now to the shorter term cycle, this is exactly what the short-term cycles currently tell us. So the 130-day cycle would fit into the context of the 41 months weekly 41-month cycle we have seen on the weekly chart just before. So that makes today, or the window of opportunity of that cycle today, quite interesting. I mean, we passed that window for the complete second half of 2025. I completely agree. It was frustrating to see that cycle downward phase here, in the second half of 2025, which just resulted, in the AI hype and the tech-driven and the S&P 500, we just saw even the upward acceleration. So it was quite frustrating for cycle analysts, including myself, to please excuse, to see that happening during the second half of 2025. So, but that's life. Not every method works every time. So, but now, and that's why I want to bring that to your attention, I think another really interesting window according to cycle analysis is on our table just right now in front of us. Okay, so that's the daily perspective on the broader market. Let's now have a look maybe also in the more S&P 500. And using the S&P 500, let's use the equal weight, because I think that's in those times when the biggest market capitalization assets just skew the overall S&P 500. I think the equal weight 500, just in terms of cycle analysis, as we don't want to pay such attention to price volatility in specific sectors, therefore to reduce the noise introduced by those high volatility spikes of some companies which have a huge capitalization, which really don't help us for cycle analysis, the equal weight S&P 500 might be a better vehicle to use. So therefore, now jumping on the S&P 500 equal weight, a daily perspective. And maybe before that, what I just did before is also a general recommendation. You should get the context or the regime, the overall situation on a longer term perspective, and the most broader index you could think about, because that gives you the overall context before you drill down into specific sectors, into specific asset classes, into lower time frames. So because an isolated cycle analysis on its own should never be used without its broader context. And that's why I like, for financial markets and the US markets, use the weekly for the long-term perspective and use, for example, the value line or the geometric value line index to get the broadest perspective you can get first, and then narrow down into your specific asset class, index, or time frame you're interested in. That's just the general rule how to apply cycle analysis, or even before jumping to drawing conclusions, what it means for your risk or trading environment. Okay, back to the S&P 500 equal weight now. What do we see looking at the cycle spectrum? And you might already see that those spectrums get more and more complicated or cluttered with a lot of potential cycles which could be used. So the broader indices and the longer term perspective was also easier to judge which cycles to use and not to use. And that's also common behavior. The more you drill down into specific segments or sectors or areas of business or even single assets, the more complicated the spectrum perspective could look like. So, and the reason I'm telling this is the one which jumps out also with the context here is the cycle with a length of 132 trading days, right? I mean, you could argue there is a longer-term cycle with 170. That's true. And we also need to have a look at that cycle. But, from the shape in the spectrum, that shape and the right shoulder and the left shoulder and the sharpness of that cycle is more pronounced than this cycle. So we have a very flat shoulder to the right of this longer cycle, which could then also evolve into a 220-day cycle. So those two cycles are not as clear as this cycle here. And you also can spot this if you look in the spectrum. So the 130-day cycle is ranked as one of the two prominent cycles just using the spectrum analysis. When it comes to the stability, we now need to be careful. This is, around the corner or at the edge where we want to have the stability to sit. But you know that looking at that index now, we have even a broader rally in the second half of 2025 compared to the value line index. So that's why the stability even is a little bit lower as we have seen that cycle. But it's highlighted. It is the second ranked cycle. And we have confidence from our previous analysis of the broader markets that the 130-day cycle is quite active across the financial market series. It could jump around in different sectors and asset classes, but it was the most prominent. So therefore, it is visible. Therefore, this is for sure one cycle we need to look at. So in the S&P 500, we almost, the S&P 500 equal weight, to be precise, we can identify the same pattern of that cycle. And that's, again, why I'm highlighting that analysis now. We are sitting on another top of that cycle, 1, 2, 3, which I'm monitoring for almost since the end of 2024, beginning of 2025, where the overall long-term cycle has rolled over. So that's the most important aspect of that cycle here to have a look on. So if we set this into context with the other potential cycles, which is the 170, for sure and we need to take that into account because from a stability perspective, that looks more promising. But as I said, there's also the 220, so it's the length of that cycle could also be here. But that's now the purpose of the composite cycle. So even if we activate all three cycles and show this on the composite perspective, you see that it looks like all those three cycles synchronize their top in the upcoming period from now, end of January, into mid or end of February. So even if we say we cannot judge yet if the 130-day cycle might be the most prominent, so we will take all those three cycles with an equal possibility into account. That means all those align their topping period even. And that's also quite interesting, right? So those three cycles do not suggest completely different patterns in regards of the current status quo. They come into alignment of a possible daily top on the S&P equal weight in February. So the upcoming time period for a daily possible topping window, right? Take into account the price situation, which I have added here down below. We see that we are coming into a very interesting possible trigger scenario where the cyclic tuned RSI indicator might trigger a possible sell signal, in that perspective. So, which we don't have seen since the November low here in the market. So there was no earlier sell signal from the technical condition. So this means now that the technical condition is again in place with the timing situation of those 3 cycles. So that's also to be taken into account, and that's the special condition just right now. Yeah, last but not least, let's jump to the S&P 500. Yeah, so now we have now the capital weighted skew. Instead of using the equal weight, we're using the S&P 500. So let's do the same principle on the S&P 500. You see even the upswing in the second half of 2025 is even more pronounced. We don't see the sideways consolidation we've seen on the equal weight or the value line. It's just upsloping almost as a trend line. That's why the cycles are not that visible, if they are overruled by the AI hype, which just are skewing the S&P 500 index as a whole. So what do we see here? Again, what's quite nice is the 130-day cycle is also visible in the S&P 500 itself. But you see, it's quite dumped a little bit, So it's not as prominent in the value line. Then we had the equal weight, and you see that cycle is dimmed now in the S&P 500. So in the skewed capital weighted indices, that cycle is not as pronounced. It's not as visible. So, but it's visible in all other series. So it should not be excluded. Maybe that's not the only one, but we know from the previous analysis in the more broader market that this is an important cycle. Then we see the 180. So what we also seen, and a possible longer cycle could come into play. So those are the possible scenarios. The 130-day cycle, we discussed this previous, I don't need to comment on that again, is topping out or has rolled over here in that case. And if we add now the 180 and the long-term cycle, so this is the pattern we are currently in. So that cycle, or the 180 cycle, is to be discussed. Not really sure, but that's the problem with those skewed. We have this huge, more or less, uptrend in the second half of 2025. So if you just see a straight upward line, there is no possible cycle which could help us in that analysis. So the whole data of the second half of 2025 is more or less useless, at least in this data set, because it's just an upsloping line. And just a pure line might reveal artificial cycles, to decompose that trend line into cycles, which then create an index. But that's critical. So not going into the engineering of cycles, but therefore the data from the second half of 2025 of the S&P, the capital weighted indices, do not really help us to get reliable additional cycles. So we see additional cycles like the 188 and the 300 cycles, but as said, as 6 months of data is just a straight upsloping line. Cycles are detected by design. The cycle analyzer will try to decompose the price behavior into cyclic patterns, but a trend line does not really reveal cycles. So we need to judge that spectrum very critical, and that's also the reason why the value line exposes cycles even better, because those individual extreme moves in just single assets are not as prominent as here. And as said, cycle analysis, you need to understand how cycle analysis works. It won't work in just straight lines. So that's That's the purpose. And the S&P 500, at least in the second half, does not deliver any clue here on that. But even adding those 3 cycles, I mean, we have that pattern here, which proposes then a sharper downward trend into summer this year, even though we cannot really use this for a top timing. Last but not least, let's jump to the Russell 2000. And the Russell 2000 now is a more broader index again as the S&P 500. I mean, by name, 2000. Yeah. And let's also check the cycles here. I mean, this is the ETF. To be honest, first, this is the iShares Russell 2000 ETF. So it's not the index, but looks quite similar. So what can we see in this spectrum, right? So, ta-da, not surprising, in the S&P, not in the S&P, in the Russell 2000, we clearly identify, again, the 130-day cycle as the most prominent cycle as seen here. So it's the most prominent. Again, we have a stability which is accepted, and from the length setting, that's the most longest cycle. So in the Russell 2000, again, we identify the cycle with a length of nominal 130 days, and you know the count here, 1, 2, 3. We are now at the third interesting top formation here. The possible technical situation is quite similar. You see it has rolled over here. I mean, we had a similar situation here in summer 2025. That's why I'm so critical with myself, because here I expected the major top to be in the center of the longer term cycle, which from a technical condition worked out, but that shorter term cycle more or less maybe did not work in the direction of the longer term cycle down. So maybe we needed to wait. Well, that's a final conclusion. We needed to wait until this up leg of the 130-day cycle has come to a conclusion, which is the case today. So we have the next technical trigger here in place, which at this point here now is in sync with the 130-day cycle. It was in sync at the beginning or the end of 2024. So with the early cycle, the technical condition was here, but it was not in sync with the shorter term 130-day cycle, and it is now in sync again. So let's see what that cyclic pattern brings to the US stock markets. So let me conclude the analysis for today, which is quite simple in the end. So we have a long-term cycle running with the 180, 190 weeks, which equals the 40 months cycle, which is valid in US financial markets for over 100 years, written and studied by Dewey and others. We see that cycle has a prominent peak 2025, so the earliest possible peak was end 2024. The latest peak for the right translation is around now. So we are in that peaking window still for that nominal long-term cycle. Looking at the short-term cycles from the broader market, like the equal weight S&P 500 or the geometric value line, we clearly identified a 130-day cycle, which is currently in its topping condition. The previous topping condition was end of 2024, early 2025, where we saw the major top in the markets. The second possible top of that cycle was mid-2025, which obviously was not a top in the markets. And now we have passed the next upswing of that cycle into early 2026, which is today. So that cycle would now be in sync with the longer term cycle. So we had a right translation of the longer term weekly cycle, which is normal for financial markets, now in sync with the daily short-term cycles, which are currently synchronizing their tops across equal weight S&P 500, Russell 2000, and the broader market. So that's the summary. You've seen the technicals confirm or jump into that conclusion. So now you have the cycle analysis for the US stock markets as we have, what do we have? 2nd of February 2026. That's what I'm seeing applying the cycle analysis to the US stock markets. As always, this is pure data driven. This is pure cycle analysis. This does not mean that this will now happen on the US stock markets. It can be a complete different picture. This is no recommendation at all. This is pure using data and data analysis with using cycle analysis, right? So every decision you make is on your own, do your own due diligence, and for sure there's much more involved to be successful in trading. I hope that's clear for us all. Yeah, thanks for joining me today. So from now on, I hope to be more regular online live again. The past 2 weeks just blocked me. So just as a personal note, we had our financial summit. I would recommend everyone to revisit those sessions. And I also had a little bit of cold. You might hear my voice is not the best again, but anyhow. From now on, my Monday schedule is freed up and cleared, so I would really like to see you live here. I mean, I just see Chickfee, William, Signor. I see you both live in the chat. So you seem to confirm more or less that the 130-day cycle is also visible in the volatility index. Thanks for mentioning that in the live chat. So hopefully next week I would like to also ask for your specific questions and then to have a live discussion again. Until then, I hope you will have a safe, nice, and healthy week. See you next week, same time, same place. Thank you and bye.